Yes, guys, so welcome back to this session. Now, we have already discussed the concepts of impairment, right? We did discuss about what is impairment. We also discussed about the measurement of impairment. We also discussed about the recognition of impairment. And when we discussed about this concept of impairment, we divided this standard into two parts. One is identifying impairment with respect to individual asset. The other one was identifying with respect to a group of assets, such group of assets being called as cash generated units. Now, this cash generating units concept also we have seen in detail. Now, we'll come into the concept of goodwill. Now, goodwill which is arising on a business combination as per IND AS 103 has to be impaired annually, irrespective of whether there is an indicator of impairment or not. Now, when we wanted to look at goodwill as an impairment, you think about it. Let's say goodwill is also an asset, 100%. So you have a carrying value of goodwill. Yes, such carrying value to identify impairment should be compared with recoverable amount. Now, recoverable amount, when I have to determine for goodwill, what is the net selling price of goodwill and what is your value in use of goodwill? Now, goodwill by itself does not generate any cash flows. Goodwill, what does it mean? It's a future excess earning capacity of an enterprise. When I talk about future excess earning capacity, how can goodwill by itself generate any excess cash flows? These excess cash flows are generally generated by all other assets which are taken over in a business combination. Correct? Now, whenever we get this concept of goodwill, it is not possible for us to calculate value in use of goodwill by itself, or even the net selling price of goodwill. I'm not saying they're zero. I'm just saying you cannot determine either the value of net selling price or value in use for goodwill. It is not determinable. It is not determinable. You cannot say it is zero. Since you cannot identify or determine what is the amount of recoverable amount of a goodwill, it is not possible for us to test for impairment of goodwill alone. Goodwill alone I cannot test. But then how will I test for impairment of goodwill? I will test for impairment of goodwill with all other assets to which this goodwill can be attributed. Goodwill is arising due to future excess earning capacity. From where am I earning this excess earning capacity? I get this future excess earning capacity with the working of all other assets which are taken over in the business combination. Therefore, all the assets which are taken over get attributed with an amount of goodwill to it. Now, therefore, whenever I have this aspect, I'll have to test for impairment of goodwill along with other assets to which this goodwill gets attributed to. Clear? So let's start understanding goodwill then. I'll start my discussion with why does goodwill actually arise, and then I'll go up. Because one has to know what is the point of goodwill. My heading is impairment of goodwill. That's a broader heading, guys, impairment of goodwill. Because to get into impairment of goodwill, there's a lot of discussion that has to go within it. For us to determine the value of goodwill, we will first have to consider, first of all, how does goodwill arise? A goodwill arises in a business combination under the standard IND AS 103. So there is an investor, or let's call him as an acquirer. Much more weightage to this name. And there is an acquiring. In a transaction of business combination, the acquirer acquires all the net assets from acquiring. He will acquire all the net assets of the acquiring. In return, as consideration, he pays certain amount either in cash or through equity shares or any debentures or bonds. This amount is called as purchase consideration. This, in simple sense, this entire transaction of acquiring net assets from the acquiring and transferring the purchase consideration by acquirer to acquiree is basically called as business combination. This entire transaction is termed as business combination in Ind AS 103. Now you will say, why did you bring in this concept of business combination, sir? Anyways, we have a separate chapter which will discuss about business combination. I completely agree. But one should know how is goodwill actually arising. So therefore, whenever I talk about this word goodwill on business combination, is equal to the amount of purchase consideration which is paid in the transaction reduced by minus fair value of net assets in acquiring. The amount of purchase consideration reduced by the amount of fair value of net assets in the acquiring, the difference between both will be termed as goodwill on business combination as per Ind AS 103. What is its relevance as per Ind AS 36? The relevance as per Ind AS 36 is that this amount of goodwill which I got should be tested for impairment annually, irrespective of an indicator of impairment. This we have seen right at the beginning itself. Whether there is an indicator of impairment or not, I'll have to test for impairment of goodwill at least once annually. Yes, this statement we have seen before. We also gone ahead and said that if such an intangible asset is generated during the current reporting period, then you will also have to test for impairment at least once before the end of the current reporting period. Before the end of current reporting period, at least once, if that intangible asset is acquired during the reporting period. Correct? So, underlying these statements, one thing we have to understand is goodwill should be tested for impairment. Now, apply the paragraphs of the standard. Okay? When I talk about impairment of goodwill, applying Ind AS 36, how do you test for impairment? Impairment is equal to carrying value of goodwill minus recoverable amount of goodwill. Correct? This is the same formula that we applied for all the assets under Ind AS 36. There is no difference even for goodwill. But look at what is recoverable amount now. When I look at recoverable amount is higher of part A or part 1, net selling price of goodwill or value in use of goodwill. What is net selling price? Fair value on sale reduced by cost of disposal. Can you sell goodwill of an enterprise alone? I can't sell goodwill alone because goodwill is like coronavirus. So what happens? It gets attached to the body sets. So same way, goodwill is something which gets attached to your other assets in the enterprise. Therefore, separating this goodwill alone from the other assets and selling the goodwill alone is not possible. Value in use. When I talk about the concept of value in use, one has to understand that it is not possible for us to determine cash flows. When you cannot determine cash flows, how will you ascertain what is the value in use of goodwill? What is value in use? It is discounted cash flows arising from continuing use of the asset and the cash flows arising from disposal of the asset at the end of its useful life. Correct? That is value in use, which we have discussed in the previous session. So when you don't have any identity of value in use or your net selling price, these two, they are not determinable. Since they are not determinable, it is not possible for us to identify impairment of goodwill. Or impairment of goodwill as an individual asset as an individual asset is not determinable. It is not possible for us to determine what is the impairment of goodwill alone. Since it is not possible for us to determine the value of goodwill alone, then we'll have to test for impairment in a different logic. Like how did you say? If an individual asset cannot be tested for impairment, it has to be tested with a group of assets which are generating cash flows independent from other groups, and this group of assets we call it as CGU. Now, when individual asset you cannot identify impairment, you had a different logic of applying this standard and you still identified impairment of the asset. Same way, even for goodwill, you have a similar logic. Even for goodwill, he is saying, though you cannot identify impairment of goodwill as an individual asset, you will have to determine the impairment of goodwill by combining it or by allocating it to other assets. Hence, goodwill should be tested for impairment in combination with other assets to which goodwill can be allocated. So we are saying goodwill is allocated to other assets, and along with such assets, I will test for impairment of goodwill. You said goodwill has to be allocated. Correct? For me to test for impairment of goodwill, it is necessary for goodwill to be allocated to various assets in the process of impairment testing. So therefore, in a business combination, whenever you got goodwill, we will have to make sure that the amount of goodwill which I acquired in business combination should be allocated to various assets which are acquired from the transaction in such a way that you have to test for impairment. Correct? Now, how does this allocation happen? So this goodwill arising on business combination has to be allocated to various assets these are assets acquired in business combination. So to the assets acquired in business combination, this amount of goodwill should be allocated. But however, he says such allocation of goodwill in to various assets acquired in a business combination, such allocation should be on a non-arbitrary basis. Should be on a non-arbitrary basis. Question comes up, what is this non-arbitrary basis? I don't even understand your term non-arbitrary basis. I'll tell you what arbitrary basis is, so that you will understand what this term non-arbitrary basis is. Because this word non-arbitrary basis is not defined by the standard. So let's go by the general logic of what do you mean by arbitrary allocation. Therefore, you can understand what is non-arbitrary allocation. For example, let's say all of you have written the same test. Same questions were asked in each test. Okay, you're writing some exam, and let's say your professional exam of CA final or CWA final level, and you people have written the same answer to the same question. The answer sheet has gone into the hands of examiner. Now ICA will slap me for saying this, but I'll still continue because I want you to understand what is arbitrary basis. You people have written the same answer. The question was the same, answer was exactly the same. No change in is or no change in and. The examiner, while evaluating the paper, to one particular student whose handwriting was beautiful, he has allotted the entire marks, let's say 10 marks. To someone who was illegible, but the answer was still the same, though he could read it, he was not convinced with the way or with the handwriting that he had. He just allotted only 6 marks. Now you will say, sir, answer same. Answer is absolutely the same. Why did the examiner give 10 marks to one person, 6 marks to the other person? I'm not saying it will happen actually. Just as an example I'm taking, please take it in the lighter side. Okay. So all those people who have a bad handwriting, don't start thinking about probably I'll get a lower amount of mark. Just to remind you, my friend who was qualified along with me is also a CA final faculty. His handwriting is such that even he cannot understand after a particular period of time. The same day you ask him, he will be able to tell you what he wrote. But if in the next day or after one month, if you ask him what he wrote, he really can't read his own handwriting. He still passed along with me with the same, almost a similar amount of mark. So you people don't have to bother. Your handwriting, if you can read, then you are definitely better than my friend. Okay. So because we had a very terrible experience when he called us home for a group study. We sat down and he said, I'll explain you this entire concept because I know this concept pretty well. We all reached his house. We all were waiting for this man to actually give us an explanation. He sat down with a book to decode what he wrote. To decode what he wrote. It was like an Indus Valley civilization script or an Egyptian civilization script where you cannot decode all. There was no E, there was no S, there was no A. There is nothing which is legible. There was something which is scribbled just like a doctor's prescription. And he wanted us to understand what he has written. So these situations are possible. If he can pass, you can definitely pass. So I'm not actually trying to say that, if you have a bad handwriting, then you have a possibility of actually securing a lower mark. Not at all. But just for an example, I'm taking this case. I'm telling you that if in case the examiner has given a full mark to one student, but only give a part mark or half the mark to another student who has written the same answer for the same question during the same exam, then this is called as arbitrary allocation of marks. Arbitrary means what? I wanted to give him 10, I gave him 10. I wanted to give him 6, I gave him 6. That is my arbitration. That is my discretion. Clear? So here also under Goodwill, you have to allocate it on non-arbitrary basis. That means it is not as per your discretion. You will have to give it based on the merits of the case. Clear? I'll write that word. Non-arbitrary basis means not at the discretion of the management. It is not at the discretion of the management that they have to allocate the goodwill to each individual asset on non-arbitrary basis. Clear? Such allocation should be on non-arbitrary basis, not at the discretion of the management. So whenever we are talking about this scheme of goodwill arising on business combination, which is being allotted to various assets which are acquired in the process of business combination, should be on non-arbitrary basis. Now someone will come up and say, sir, I did not understand yet. I still did not understand what do you mean by this non-arbitrary basis. I did not understand how to allocate goodwill in a practical situation. Tomorrow, if I find a goodwill in the books of a particular enterprise, and this goodwill arised as per IND AS 103, I still might not be convinced about allocation of goodwill to individual assets on non-arbitrary basis. Please explain. I'll go on. Let's say, for example, there was an enterprise. This enterprise, which I'm talking about here, has let's say operations in various countries. My operations in various countries are India, Europe, and America. America includes South and North America as well. Okay, my operations are broadly split into geographical locations of India, Europe, and America. Okay, let's have even more specific. So I can make this as Asia because I think we'll have to broader ambit. Now this enterprise was particularly into manufacturing of fairness creams. Now someone might believe I'm the most racist fellow because half the time I keep talking about fairness cream. Absolutely not. Because that is the first thing that hit my head, because I really don't like this concept of fairness cream here and nothing else. Okay, so that's the first thing which will always hit me. One is garments because I hate shopping. Other one is fairness cream because I hate those advertisements which are played. Okay, so generally these are the first two examples which I always get, unless and until some other example is necessary. Okay, I think even under IND AS 105 I have taken example of garments as well as fairness cream. I normally take these examples a lot of times. So let's say it was a fairness cream. I observe that under each of operation, under Asia, I had operations in India, I had operations in China, I had operations in other Asian enterprise. I would have written Korea as well and Japan, but I don't have enough space, so I'm just writing other Asian countries. Europe, I had my operations divided into UK, and other Euro countries. UK is not a Euro country anymore. US, Canada, and Mexico is there, but South American countries. Okay. Now, under Indian operations, again, I have multiple places. Okay. So let's say I have South and North. Like this, I had multiple places in each state. Under South, let's say I had again 2. Or let's say I have 3. AP, Tamil Nadu, Kerala, Karnataka, I could have even more also. Under each state, I have multiple operations as well. Now I'll stop there. I don't want to go further, but like that you can have distinguishments in each case as well. Under UK also I can have multiple states within the same country. So I can go on, but I don't want to expand too much further because my fundamental understanding is for allocation of goodwill. I observe that the future excess earning capacity, that means I am making a profit much more than normal profits. If I make profits much more than normal profit, it is called as excess earning. This excess earning is available to me in Asia, is also available to me in America. But I don't have the same excess earning capacity or beyond normal profits in Europe. So therefore, goodwill can reasonably allocated only to Asia and America. I cannot say divided by all the countries put together, not possible. I'll have to identify where is the value of goodwill. Under America, I don't have the same beyond normal profit in US because everyone are quite fair. Canada, quite fair, white dominated countries. So white dominated countries, I don't have much of a profits, but I have super good profits, beyond normal profits in Southern America. Europe anyways it doesn't have, so leave it there. If I come to Asian countries, I found that majority of my profits were actually derived from India. I don't have a similar profitability from say China or any other Asian country. Okay. Among India also, I found that South is quite obsessed with fairness more than anyone else. Okay. And then out of that, I said probably all 3 states within the South, which I have given out here, have allocation to goodwill. So in this case, what? First, I allocate goodwill of the enterprise to Asia and America. How much amount of goodwill? We'll have to check. Now I'll have to go into Indian enterprises. I'll have to try to allocate how much of a goodwill is arising due to operations down in South. How much of goodwill arises to AP, Tamil Nadu and Kerala. So in this way, when I start allocating goodwill, I will start from the bottom. I'll say first allocate goodwill to AP, Tamil Nadu, Kerala. Then you will identify what is the total goodwill allocated to South. Once you identify total goodwill allocated to South, then you can identify the total amount of goodwill allocated to India and Asia as well. Similarly, even to Southern American countries as well. So this approach is called as bottom-up approach. If instead I allocate goodwill to the continents of Asia and America, and then out of Asia's goodwill, how much of goodwill should be allocated to India and other Asian countries? If I go in this approach, then I'm moving from top down. These two approaches, bottom up and top down approach, were given under IND AS, your AS 38. This was given in your AS 38. However, similar approach names are not given under IND AS 36. It's 28 guys, not 38. Similar names were not given under IND AS 36. But as such, when I talk about non-arbitrary basis indicates you will have to technically identify how much amount of goodwill is allocated to each section of the net assets acquired from the enterprise. So if this enterprise is taken over by another enterprise, then there is a goodwill which is emerging. Such amount of goodwill which emerge in the business combination, how should I allocate the amount of goodwill? There are multiple assets in the enterprise. To the extent of assets which are allocated to Asia and to the extent of assets allocated to America, I'll have to allot goodwill. I have to apportion goodwill among Asian enterprises. To what assets are actually linked to Indian operations, only to those Indian operations I'll have to allocate goodwill. So like this, I will start allocating goodwill on a non-arbitrary basis without applying the discretion of the management and identifying which asset earns excess over normal profits. So, goodwill is allocated to individual assets or to group of assets, that is CGU, or to group of CGUs by determining which asset or group generates excess profits over normal profits. Which asset or a group generates excess profits over normal profits. This is called as non-arbitrary allocation of goodwill. 99.9% of the situations, he will tell you what is the basis of allocation of goodwill. 99.9% of the cases, he will tell you what is the basis of allocation of goodwill in the problem itself. If there is nothing given, remember, it may not be reasonable to allocate goodwill. If nothing is given in the question, then it may not be reasonable to allocate goodwill to cash and cash equivalents, or to debtors and receivables. Receivables can be also in the form of bills receivable or in the form of advances or assets held in the form of prepaid expenses. These are also assets only. Amounts held as deposits Accept. I'm not moving anything else. If you want me to write one more, I can write one more also, yes. Investments other than in group enterprises. I hold shares of Infosys. I hold shares of Reliance. I cannot allocate goodwill to my investments in these enterprises. So these assets, it is not reasonable to allocate goodwill. So you can allocate goodwill to investments in group enterprises like subsidiaries, joint ventures and associates. You can allocate goodwill to intangible assets. You can allocate goodwill to property, plant and equipment. You can allocate goodwill to your property, plant and equipment or intangible assets or investment property. But it is not reasonable to allocate goodwill to assets under these categories because these categories are not generating any profits. These are resultant of operating activities of the enterprise. They are resultants of operations in enterprise. So, what are the other assets which are used in the process of operations are the assets to which goodwill should be allocated on non-arbitrary basis. That word I'm continuously repeating again and again because the discretion of management is not possible in allocation of goodwill. Clear? Now that we got about this concept of allocation of goodwill, how do I impair goodwill? When I understood the concept of allocation of goodwill to individual assets or group of assets or group of CGUs, how should I test for impairment of goodwill? I'll put it like this. If goodwill is allocated to an individual asset, then the asset to which goodwill has been attributed or allocated should be tested for impairment. If I identify that the recoverable amount of the asset is less than its carrying value, that carrying value includes the amount allocated as goodwill, correct? Then there is an impairment. Such impairment on the asset to which goodwill has already been allocated to should be first reduced from the value of goodwill which is allocated to the asset. I'm saying again, if there is an individual asset to which goodwill gets allocated, then identify impairment on that individual asset. If your recoverable amount is less than carrying value, then the asset is impaired. To the extent of impairment identified on the individual asset, first reduce the value of goodwill. If your impairment is more than the value of goodwill allocated to the asset, only then the balance amount should be reduced from the carrying value of the asset. Let me write down what I said. I think it is better to understand while you write. When goodwill is allocated to an asset or a group of assets, impairment should be tested as, how do you test for impairment? Impairment is equal to carrying value of asset or group of assets this carrying value includes goodwill allocated. It includes the carrying value of goodwill allocated to such asset or group of assets. Such carrying value should be compared with its recoverable amount minus recoverable amount. If you identified that there is an impairment here, what do you mean by impairment? That means the recoverable amount is less than the carrying value of the asset or group of assets, including the amount of goodwill allocated to the asset. In such cases, if recoverable amount is less than carrying value, in the previous formula which you have written, impairment is equal to carrying value minus recoverable amount. If your recoverable amount is less than carrying value, then impairment here is nothing but difference between both of them, recoverable amount and carrying value, should be first allocated to the amount of goodwill or to the value of goodwill included in the carrying value of assets. In the carrying value of asset or group of assets. Okay. If the impairment identified is greater than the goodwill, if the amount of impairment is greater than the value of goodwill allocated, then the balance should be considered as impairment of asset or group of asset. Impairment of asset or group of assets. Take this down until here. I will give you an example to explain what I am talking about so far. Now you'll say, I did not understand yet. Then I'll give you an example. Example. Let's say, for example, carrying value of asset to which goodwill was allocated. I'm writing it as GW, goodwill was allocated. Let's say this asset had a carrying value of 100. The amount of goodwill allocated to this asset let's say was about 40. Therefore, the total carrying value including goodwill is 140. This carrying value has to be compared with the recoverable amount. Let's say the recoverable amount which is attributed to this asset, that is higher of value in use or net selling price. Let's say such a recoverable amount was 92. Therefore, I have a 48 rupees of impairment. In such cases, where I have 48 rupees of impairment, this 48 rupees should be first allocated to the value of goodwill and then the balance to the value of asset. In such cases, I'll write an entry like this. Impairment account debit to the value of goodwill allocated to the asset to asset. How much? Impairment is 48. How much should be allocated to goodwill? The entire amount of goodwill or the entire amount of impairment should be first allocated to the value of goodwill. Goodwill allocated to the asset is 40. Entire amount of goodwill should be written off. Balance if any. That means if your impairment is more than the value of carrying value of goodwill allocated to it, then the balance 8 will be taken. Now you will say, sir, what if this impairment, this goodwill was not allocated to an individual asset like this, but actually it was allocated to a group of assets which form a CG. Okay, no problem. Again, another example then. Carrying value of CGU was, let's say, 100 rupees. This carrying value of CGU has been split into broadly 3 assets. Asset A1, which had a carrying value of 60, asset A2, which had a carrying value of 30, and asset A3, which had a carrying value of 10. Okay. Let's say to this asset, or to this CGU, the goodwill allocated again is the same amount, let's say 40. That means the total amount being 140 shall be considered as carrying value of the CG. To this CGU, I identified a recoverable amount, and comparing this carrying value and the carrying amount, I identified certain amount of impairment to the CG. Let's have certain values, okay? I'll take a value. I'll take it as 95 Or let's take the same value, no? It was 92 and the impairment was 48. Same way I've written it. Now what is the recognition that you write? I'll recognize the entry like this. Impairment account debit 48. First should be allocated to the value of goodwill, which is included in the carrying value of the asset, which is 40. What about the balance 8? The balance 8 should be allocated to the assets within the CGU. So, to asset A1, A2, A3. How do I allocate impairment to each asset? In the proportion of their carrying value. Balance 8 rupees should be allocated in the ratio of their carrying value. What is the carrying value of these assets in the CGU? That is, check what is the carrying values. 60, 30 and 10 in the ratio if you take, it is 6:3:1. 6:3:1. How much amount should be allocated in 6:3:1? Out of 48 rupees of goodwill, 48 rupees of impairment, 40 rupees already allocated to goodwill. So it is only balance 8 rupees which should be allocated to each asset in the carrying values of 6:3:1. Therefore, the amount should be 8 into 6 by 10, 8 into 3 by 10, 8 into 1 by 10. Allocated in the proportion of their carrying values to each asset in the CGU. So this is 4.8, 0.4, 0.8. That's it. So this is how I'll identify impairment on goodwill. Goodwill by itself cannot be impaired. That is what I started my discussion with, because I said it is not possible for us to identify the value of recoverable amount to a goodwill, because there is no value in use or net selling price which you can identify to the amount of goodwill. Since you cannot identify recoverable amount of goodwill, it is not possible or it is not determinable to impair goodwill as an individual asset. Since you cannot impair goodwill as an individual asset, it is required that you try to allocate the goodwill either to the individual asset or to the group of assets called a CGU, or if not possible, try to allocate it to group of CGUs. In such cases, where you allocate the amount of goodwill, the basis of allocation should be on a non-arbitrary basis. What do you mean by non-arbitrary basis? You are not supposed to apply management discretion in allocation of goodwill. It should be based on facts and circumstances, not based on discretion of the management. In a similar scene, I also told you that top-down and bottom-up approach are two similar approaches which are applied in allocation of goodwill as per AS 26. Though Ind AS 38 does not, though Ind AS 36 does not prescribe any of these methods, it just used the word not discretionary or non-arbitrary basis. Whenever a goodwill is allocated to an asset or to a group of assets, and there is an impairment identified to such group of assets or individual asset, the impairment should first be allocated towards the value of goodwill. Only the balance amount after writing off the entire value of goodwill should be either allocated to the asset or the group of assets. If it is a group of assets, then the balance impairment should be allocated to each asset in the group in the proportion of their carrying value. Clear? Clear so far? We have been discussing for the last 1 hour only about allocation of goodwill and trying to impair goodwill. That's it. That's it. Now, a similar concept to goodwill, now that you have understood goodwill, similar concept also applies to impairment of corporate assets. What is this concept of corporate asset, and why should I apply a similar logic even to impairment of corporate asset as well? What do you mean by corporate asset? Tell me first of all. Tell me first, what do you mean by a corporate asset? A corporate asset is like an MD's chair, an MD's table, the accounting software you apply. Okay, take accounting software. We purchase SAP here. We are using SAP, which is an intangible asset identified in our books of accounts, and we are trying to use the same SAP for management of our accounts, inventory, purchase orders, everything. So it was the entire FICO module or the modules of SAP which have been embedded into your system so as to make sure that you are in compliance. So you have enough internal controls by applying SAP. Very good. Test for impairment of SAP. Test for impairment of only that accounting software. Carrying value of asset, yes. Minus recoverable amount. Net selling price. You customize the software to your purpose. It is for your use. I may not be able to identify a buyer of a similar software. Number 2. Can I determine value in use? Even if you can determine what is the net selling price, keep it aside. Can you determine value in use? You'll say, sir, if I can identify net selling price, then let it be no recoverable amount is equal to net selling price. No. If you cannot determine fair value, then you can take recoverable amount is equal to value in use. If you cannot determine value in use, he never said take recoverable amount is equal to net selling price. Don't apply vice versa situation. Will I be in a position to determine what is the value in use expected to be derived from the use of an accounting package? How do you determine value in use? Present value of cash flows derived from continuing use of the asset plus the cash flows derived from subsequent sale at the end of the useful life of the asset. Cash flows. Will you derive cash flows from the use of a SAP accounting package? Can you derive cash flows from it? Is it an operating asset first of all? It is only an administrative tool. Such administrative tool cannot generate cash flows to an enterprise. So therefore, when it is not deriving cash flows to an enterprise, it is not possible for us to determine value in use. When you cannot determine value in use, you cannot identify recoverable amount. When you cannot identify recoverable amount, you cannot measure impairment. Correct? So that is why I say corporate assets cannot be impaired individually. Corporate assets cannot be impaired individually or tested for impairment individually. Use whatever language you want. It cannot be tested for impairment individually or they cannot be impaired individually. Since, give me your conditions. Number 1, consequential points. VIU of such assets, value in use of such assets cannot be determined. Since value in use cannot be determined, as a consequence, recoverable amount is not identifiable. Since recoverable amount is not identifiable, impairment is not measurable. You can only measure impairment if you can determine the value of recoverable amount. So I'm saying value in use of such asset cannot be determined because as a consequence, recoverable amount is not identifiable. If it is not identifiable, it is not possible for me to measure impairment. So consequentially, I can come across the same derivation saying that you cannot measure for impairment of corporate assets individually. Then what do you have to do? Should I forget about impairment of corporate asset? No. You can give certain examples for corporate asset just for your understanding. Your office furniture, laptop of the accountant, accounting or payroll softwares, all these, they do not generate any cash flows. They are pure administrative assets under the definition of IND AS 16. These corporate assets are administrative assets under the definition of IND AS 16. Corporate asset is equal to administrative assets. Administrative assets as defined in IND AS 16. If you remember, I told you administrative assets, they do not generate future economic benefits by themselves, but they help other assets, they aid other assets to generate some future economic benefits to the enterprise. That is why administrative assets are very similarly called as corporate assets under IND AS 36. Clear? So since you cannot impair this corporate asset individually, since you cannot identify the recoverable amount, we'll have to allocate this corporate assets to various assets on a non-arbitrary basis. For purpose of impairment testing, such corporate assets, since you said they cannot be individually impaired, they should be allocated to other assets or group of assets on a non-arbitrary basis. Again, the same words. Used under goodwill, non-arbitrary basis. That means there is no management discretion. We have discussed about this term non-arbitrary basis. So therefore, allocation should happen for corporate assets. Once you allocated it to other assets and you tested for impairment, under goodwill, what did you say? The impairment should be first reduced from the value of goodwill and then to other assets. Such policy is not applicable under corporate assets. Here, the impairment should be allocated to each asset, including corporate assets, in the proportion of their carrying value. Impairment should be allocated to each asset along with the corporate asset in the proportion of their carrying value. For the purpose of impairment testing, such corporate assets should be allocated to other assets or group of assets on non-arbitrary basis, and the impairment should be allocated to each asset in the proportion of their carrying values. Here, this is fundamentally the difference between goodwill and corporate assets. Goodwill, we said impairment should be first allocated to the value of goodwill and then to the remaining assets in the which are being impaired. But corporate assets, same formula does not apply. Though your corporate asset is also being allocated on a non-arbitrary basis, for the purpose of identifying impairment, the impairment loss should be allocated to other assets along with corporate asset in the proportion of their carrying values. Clear? So you do not write off corporate asset first and then the balance other assets. Goodwill logic don't apply in corporate asset. Until allocation, it is the same policy, but at the time of identifying and recognizing impairment, you have a different logic altogether. Clear? And that will bring us to the end of discussion on goodwill as well as corporate asset. So we are done with goodwill and corporate asset and the recognition of impairment. Since they cannot be identified or they cannot be impaired individually, we are allocating this goodwill and corporate asset to other assets or group of assets on a non-arbitrary basis. We have discussed this in detail. What is non-arbitrary basis? How the allocation happens. At the time of impairment of an asset to which goodwill was allocated should first be allocated to the value of goodwill in it. The balance, if any, that means if impairment is greater than the carrying value of goodwill allocated, then the balance should be allocated to other assets or group of assets. But under impairment of corporate asset is allocated to other assets or group of assets on a non-arbitrary basis, similar to goodwill. But if such group or such asset is being impaired, it should only be the impairment should only be transferred or allocated to the assets, including the corporate asset, in the proportion of the carrying value in it. You don't impair only the corporate asset first. That is a significant difference as far as recognition of impairment is concerned regarding a corporate asset and the goodwill. But as far as allocation is concerned, similar lines are being used. And that will bring us to the end of the concept of discussion under impairment of goodwills and corporate asset.